Hey guys, Lara Rockefeller here, and today I wanted to talk to you a little bit about what we look at when we're qualifying you guys for a mortgage. So I don't know if you've ever heard of the expression of GDS and TDS and wondering what the heck is that when you're talking to one of your mortgage professionals. So GDS stands for gross debt servicing and TDS is total debt servicing. So what that means is when we are qualifying you for a mortgage, we take a look at for GDS, so the gross debt. That is everything that goes in, all your payments when you have a house. So that's your mortgage payment, your property tax, 50% of your condo fees, and we take a look at those payments. We add them up for the year, and then we take your gross income for the year and we add it up and then we divide it. We divide all those payments by your gross income. That number has to be below 39% in order to qualify for a mortgage, especially when it's insured. So when you are putting less than 20% down, because you have to meet the insurance criteria as well as the lending criteria. Then we also look at your TDS, which is your total debt servicing. So we take all your other monthly payments, so car payments, credit card payments, any payment that you have, we take all of those payments as well and we add them into the total as well. So same kind of formula, taking all your payments, monthly payments, and dividing it by your gross income. That number has to be below 44% for people with credit scores over 700. If your credit score is lower than that, it's actually, the number goes down. So we have to stick within these ratios. So if you've ever been qualifying yourself for a mortgage and you hear your mortgage professional talking about ratios or qualifying numbers or keeping you in a certain line, that's what we're talking about. We're just taking a look at all of your payments that you have to run your life, making sure that you can still afford it. Okay, so what happens if you are over those numbers and you're over 44% or even the lower number for when you have lower credit? Well, what that means is you either need to come up with more of a down payment to help bring those numbers down, or you need to try and pay off some of your debt. Okay, so car payments I can really hurt you. So if you're thinking about getting a mortgage anytime soon, please do not go out and get a car payment or a boat payment or quad or any other monthly payment like that, because they can really bring down what you're able to borrow. One good rule of thumb is think of every $400 payment per month actually takes away $100,000 of what you could qualify for a mortgage. Okay, so that's really important to be thinking about these things. So don't go out and get new payments right now if you're thinking of house shopping. So like I said, in order to try and bring your numbers back below certain ratios, paying off any credit cards, lowering your monthly payments on anything else, and upping your down payment. Those are ways that you can qualify for a bigger mortgage or where you want to be. Okay? So I hope that explained a little bit of what GDS, gross debt service, and TDS, total debt service ratios are. Okay, thanks guys. Have a